Time now for Hot Picks. Our next guest says real estate investment trusts are an effective hedge against inflation, and he sees above-average earning growth from some REITs so far this year. Let's bring in Rob Lauzon. He's Managing Director and Chief Investment Officer at Middlefield Capital. Thank you for coming in.
How you doing, Paul?
What do you think of the performance of the REITs in the first half of the year?
Disappointing and lackluster. One of the worst performing sectors out there, both in Canada and in the U.S., which surprised us because many of our holdings and many of the underlying subsectors of real estate have great fundamentals and have actually grown NOI, or net operating income, while their stocks are down anywhere from 10 to 25%. What's happened is there's been a paintbrush of negativity because of office and real estate.
Because of office, the office segment,
the office
right?
sector. Mm-hmm. And real estate has been hit. I think there's been 4 gut punches to the sector with COVID, kind of work from home, rising interest rates, recession fears, the office overhang, and that's all priced into the stocks now. So, and a lot of that really just focuses on that one sector, office. But when you look at other sectors within REITs and real estate, retail and industrial, apartments, NOI growth, and even senior homes and retirement homes are coming back. They're growing, and fundamentals are strong. So we think that there is, and this is why it's a hot pick this Friday, is we think it's an exceptional time for investors to look at the sector that's been really thrown out by all institutions. It's a fairly small sector on each exchange, so institutional fund managers can avoid it and still be okay, and they can maybe just buy Marriott, the hotel, or maybe just to get some exposure and really not dig into the sector. They're busy digging into technology, financial, industrials. So we think there's a hidden value here in real estate. We're an expert here in REITs and REIT funds in Canada. And we've got three ideas today that I think will make all your viewers money over the next year. Okay,
well, let's get into those ideas. The first one is Granite REIT, ticker symbol GRT on the TSX, specializing in industrial real estate.
Yeah, so these are those big buildings you see by the airport, FedEx, right, Amazon, and then they're building, and a lot of these buildings are being converted with very high automation for onshoring that's occurring. So the world deglobalized over the last 20 years, outsourced to China. That's coming back. So when you go to Michigan, Ohio, Windsor, Ontario, these buildings are going to be filled with automation, whether it's electric vehicles, batteries, semiconductor plants, Ohio, Arizona. This stuff's all coming onshore, and you need places to store stuff, and you need places to operate. So Granite, 50% exposure to the U.S., 30 in Canada, 20 or so in Europe, gives you a global player, low leverage, quality management, no issues. They're rolling rents. If they have a rent due right now that they can roll for the next 5 years, they're getting 20% uplift and income in that rent level. That's a positive story in real estate. Stocks trading at 20% discount to its NAV, which is unfair. It's just no one's paying attention. So here's a story that I think is a great opportunity in a very hot sector. And in fact, Blackstone just sold very similar assets to Prologis on Monday for $3 billion. If you use that 4% cap rate valuation to Granite, the stock would be up 25–30% in a day. So it just shows you it's a hidden gem out there, and patience will be a virtue here.
Okay, number 2, First Capital REIT, ticker symbol FCR on the -U or .U on the TSX. It's retail real estate.
Yeah, so necessity retail. It's a Shoppers Drug Mart, Loblaws, Dollaramas, and 90% of their locations are in VETCOM City, VETCOM, which is Vancouver, Edmonton, Calgary, Toronto, Ottawa, and Montreal. That's where you want to be. That's where immigration is happening. And we're downtown Toronto right now. You walk around, you're going to see all of these type of locations, even in urban areas now. You see the Loblaws and Shoppers. So, First Capital trades at a 35% discount to NAV. We typically buy REITs when they're at a 15% discount to NAV, and we sell them when they're at a 15% premium to NAV. This is at a 35% discount to NAV. Has a bit too much debt. They're selling off assets at NAV to pay down debt. It's got a 6% dividend yield, NOI growing, another hidden gem, which gives you some diversification. I showed you an industrial. Here's a retail idea. And then
now you've got one in the office space. So this is striking, given what you've said about office and the paintbrush that's being applied to the REIT sector as a whole. Allied Properties REIT, ticker symbol AP.
Yeah, so this is the highest quality office REIT in Canada. We just moved into their building, The Well, 8 Spadina, down the street here. It's fantastic. When they build out the retail there, it's going to have apartments, condos, retail, and office. And it's fabulous. It's got the amenities that all three of those type of individuals or consumers would want. And they do this in Calgary, Montreal, and Toronto. So you do not want to own office of a 4-story office building on Yonge Street. That will be 50% empty for a long time, and you'll have to put a lot of money into changing that into something else. The brick and beam buildings that Allied has the best amenities, best locations. They're full.
Those are the older warehouse.
Yeah, you see them in King West in Toronto. You see them in Old Montreal by the waterfront there. They're 85 to 95% fill, and again, this REIT is down 65%. I'm not saying it's going to trade at NAV tomorrow, but it just sold off some of its data centers for $1.4 billion to pay down debt. It doesn't have a dividend problem, although the dividend is 8%. You just got to be patient with this one. If you're going to own office, here's an idea. And we're slowly legging into the stock currently. And I think if this trades at a 20% discount to NAV, you're going to make 20% this year plus an 8% yield. So that's a great return.
That's Rob Lauzon. His top picks, his hot picks are Granite REIT, First Capital REIT, and Allied Properties REIT. Thank you, Rob, a great deal for coming in.